Hello, hello, hello. Happy Monday. If you're joining us for the first time this morning, welcome. If you were here for our 9 o'clock training on retirement contributions and deadlines, welcome back. So I'm going to take a sip of my coffee. And not a new mug, but it's been a while. This was hiding in the back. So it's been a while since you guys have seen this. Like Marauder's map. If you're a Harry Potter fan, you'll appreciate this. If not, you're like, what the hell is she showing me? Someone was where I'm up to no good. My favorite part, okay, I don't know if it's my favorite part or my biggest like pet peeve, but like it says mischief managed right here. And I really, really, really wish it said it at the bottom of the mug. Because that makes sense to me. But you know what? I didn't design it, so it's fine. So again, welcome. You guys, please start putting your questions in the chat. I will talk a minute about the lack of updates we have and what I think is going to happen. But yeah, other than that, you know, I'm here to answer questions. That's what we're here for. It's free accounting help. Oops. I forgot to open my, give me one second, guys. I usually open my unanswered questions just in case you guys don't have any. So I have some ammo if you guys need it. So there we go. Okay, there's my notes. Okay. Thank you. It's a little darker than normal. We went with a darker blonde, and usually we go like 2 to a red, I think, but we won for 1. So it was new, but thanks. And it's straight. Look how for those jumping around. I'm jumping around on my screen. Tell me if I'm choppy on your screen. But look, it's straight. Like I knew my hair was long, but getting real long. I'm sorry if I'm choppy. Will someone let me know if I'm cutting in and out or if I look okay? Wendy, not if I look okay, but if my look and sound okay. While we're doing that, no, my internet's running slow. I bet I am choppy because I was trying to. I always try to jump on right before, you know, I work. I jump on because I always try to Monday morning. You are choppy. Dang it. I don't know why. I'm going to jump off and jump back in. All right, guys, please come back. I see how many of you are here. And if you don't come back, I will be hurt. So I'm going to jump off and jump right back. Wait, am I still? I think I'm good. I'm going to stay here. If I'm still choppy, let me know. I'll jump out, jump back in. But otherwise, I look like I'm looking better. So we'll go with it. So, okay. So I found an article this morning and got excited. And why do I get excited unnecessarily? Because nothing ever happens. The Democrats and President-elect Joe Biden are all like, let's find a compromise. Let's get the stimulus money out there. Let's do all these things. You know, Congress should be working on this. And then you got the other side, you got Mnuchin, which is he's working with all the GOP, saying we have to discuss a plan and pass a targeted stimulus, but we need the Democrats' help. So they're both making it seem like they're working on something and that it's the other side that's preventing it. But, you know, that's what we're used to. So that's what it is. So both sides are saying, though, you guys, that because we weren't sure. Sorry, there's a hair. Because what we weren't sure about is, would anything pass before the end of the year? Because So many things are in limbo. So many things are changing. We have a Democratic president coming in on January 20th. We have a Senate that is split right down the middle right now, with 2 seats being elected in January in Georgia. We have, with an outgoing president, a lot of times they don't do much in their life. I mean, that's common theme. A lame duck president doesn't really do much, because why? So I was like, I feel like it's going to be January before we see anything. But over the last 3 or 4 days, since like Thursday, you see both sides saying that they want something passed in December. So will we see something passed in December? I don't know. The thing I read on Friday, you guys, was like they were still arguing. Well, they're still arguing about the amount of money, right? The House, the Democrats keep coming down. The Republicans keep saying it's not enough. So that's one big thing. But the other one that they're really fighting on is the business liability piece. The L in the HEALS Act. And that's the part that says doctors, hospitals, all the people that are taking care of us are going to be free of liability if anything goes wrong in the treatment. General speaking, guys, that's very general. I'm not keeping up with it that much, because until something passes, do I care? I mean, I care, but there's so much hearsay on both sides that I kind of read both sides, right? And I share with you guys what's actually meeting, right? Like, what do they both agree on? So last time we had chat, they agreed on a lot of things, you guys. There was just a handful of disagreements that were keeping them from passing something. So I feel more, I don't want to say confident, hopeful that something does roll around in December. Fingers crossed, because individuals need stimulus payments, businesses need, new PPP, new funding, more funding. Especially, I don't know how everything is around where you guys are, but in Colorado, we shut down again this weekend. Restaurants went to outside dining and takeout only. Gyms are at certain, different capacities. Like, we're back in lockdown. So, and I think that's kind of common across a lot of the country. Okay. I have rambled, you guys, for 10 minutes, and y'all haven't given me any questions in the comments. What in the world? You guys, what is happening? You guys know everything? Don't think so. That's why you're here. So ask me. No such thing as a, silly question, dumb question, repeated question. I am here to answer whatever questions you have. That said, I will answer. Let's see. I'm still getting a lot of questions DM'd me and emailed to me about reasonable compensation. So I want to talk about that really quick. Not really quick, but I will talk about that while you guys fill the chat with your questions. So reasonable compensation, you guys, is for corporation officers. Corporate officers. So if you are a Schedule C business or you are a partnership, then you don't have to worry about reasonable compensation. Okay, it does not apply to you. Okay, but a reasonable compensation for most of the people in here, it's going to be my S Corp officers that I'm talking to, because there aren't very many C Corps in here, at least not that have ever chimed in on these lives. So I'm going to talk to my S Corp officers really quick. Okay. So if you're an S corporation and you work in your business, then the business is required to pay you a reasonable salary. So W-2 wages for what you do in your business. So what is reasonable compensation? Or like, how much is it? It depends. It's going to vary depending on so many variables. And this is why you should absolutely be working with your CPA or a trusted, tax advisor to figure out what your reasonable compensation is. So the main components when you're calculating reasonable compensation, okay, you have to look at what you do in your business. Okay, what do you do in your business? All the things, right? So for me, right, I let's say I do tax returns. I don't do tax returns anymore. I review tax returns, right? So I'm a principal CPA in my business. So I'm reviewing tax returns. I'm doing tax planning. I'm doing client consultations. I think client facing, that's kind of the bucket I do. And then there are still some admin things that I do in the business, right? And so you got to consider that too, like the administrative tasks that you do in the business, right? So if you're doing the financials, if you're sending out emails, if you are intaking new clients, if you're doing all of those things, those are tasks inside your business and they need to be accounted for. If you're doing the marketing, if you're doing the IT, all of the things you do in your business, I'm not kidding, need to be accounted for. So then once you have that list of all the things that you do in your business, then you look at, okay, well, how much would I get paid to do these things for somebody else, Okay. The other side of that is how much would I pay to have someone do these tasks inside my business? Okay. So those are pieces of the puzzle. Another piece of the puzzle is what is your total income? What is your total income in your business? Your net income, right? So that's a piece. And then the final piece that's usually goes into this calculation is how much money am I taking out of the business? All right, because if you're taking no reasonable compensation, but you're taking $100,000 in distributions or draws out of your business, you got a problem. All right. And honestly, that goes, even if you're taking $40,000 as reasonable compensation, okay? If you're taking $100,000 in distributions or draws, still might be a problem, okay? The problem is $40,000 enough? Is $70,000 enough? Is $100,000 enough for reasonable compensation? We don't know until we do an analysis of your industry, your duties in the business, again, what you would pay somebody to do those tasks in your business, what you pay to do them for somebody else. So all of those pieces of the puzzle kind of go into calculating that reasonable compensation. All right. And what happens if I don't pay myself a reasonable compensation? Well, first of all, if you don't pay yourself a reasonable compensation, but you're not taking any money out of the business, doesn't really, for the time being, it doesn't matter. Okay, but if you're taking money out of the business through distributions, but not paying yourself a high enough reasonable compensation, and the IRS catches you, they can reclassify some of those draws or distributions to compensation. Okay, and they can do that for 3 years. They can do a look back period of 3 years. Okay, and they can say, they can look at those 3 years and say, okay, you should have been paying yourself this much money over all 4 of those years through reasonable compensation. You didn't, and you took this much in draws and distributions. So we're going to change those from tax-free draws and distributions to reasonable compensation. And now you owe all of these back payroll taxes. Okay, payroll taxes are typically 15.3%. We'll say 16% because you got a few other payroll taxes in there. Okay, 16-ish%. Okay, so if you owe 16% of your $100,000 in reasonable compensation that you miscategorized, okay, not only are you going to owe that $16,000 in payroll tax, but there's going to be penalties and interest on that. So it's really important to find that balance. The other piece being, you guys, that when you are an officer in your S corporation, if you're not paying your reasonable compensation, your W-2 wages are that number is the number used when you go to claim Social Security. All right. So if you're claiming $10,000, $20,000 a year in W-2 wages, that's all they're going to look at when they go to calculate your Social Security, when they go to calculate that. And that, my friends, is a 60-year look back period that they use to calculate that. That seems like I'm lying or that I'm misinformed, but I'm not. I just looked that up. So if they look at and all they see is $10,000, and your Social Security isn't going to be that much. Do you care? Maybe not, but just it's another piece of the puzzle to think about. Okay. So that's reasonable compensation. Let's see. Let me look at our group and see if I see any other questions that I maybe haven't answered this week. So many notifications. Okay. Nope, mostly me. Let's see. Oh, Wendy. Hey, yo. Wendy coming in with the assist. So Wendy says, how long should my personal tax returns? How long should I keep my business tax returns? So 7 years. 7 is the lucky number, or is the magic number. Okay, for both, for any tax documents. 7 years, because that's the, is it statute of limitations? That might be the right thing. The statute of limitations that the IRS can go back, okay, and look at your books. That said, if there are any documents, like, it's where it gets tricky. So like if you purchase an investment property, but you purchased it 10 years ago, I would still keep your settlement sheets and stuff. That's not necessarily your tax return, but I would keep those documents, because when you go to sell, you might need that, especially if you're jumping around with accountants, because your tax return tracks a lot of your personal information of that, like depreciation and asset schedules, but not always all of it. I know that sounds kind of weird, but so if you're jumping, if you're switching tax accountants, hopefully they're good and they're like, hey, we need your asset list from your last accountant. But sometimes they don't, and you could not get in trouble, but you could be in trouble if you go to sell something that is past that 7 years. So 7 years, though, is what the IRS says, and that's how long we keep all of our client files. Okay, so great question, Wendy. Give me more. And I'm pretty sure Wendy's just making me feel better, because she's just trying to give me some ammo, because she knows the kind of, she's also a tax preparer, you guys, so she knows the kind of questions that y'all are asking. Okay. It's all me in my feed. Okay. Okay, there's another one I get asked quite often. Like, what is the #1 tax saving strategy that you recommend? What is the #1 tax saving strategy that you recommend? It depends. That's the worst answer, though, right? But it really does depend on your situation. But generally speaking, without knowing your guys' individual tax pictures, is going to be your retirement contributions, okay? That to me is the single most important, because it's investing in your future, okay? Like, so many people come to me and they're like, I have a business and I have profit, and so I'm gonna go spend my money, okay? And they spend it on expenses, okay? So let's have a little lesson here on an expense versus an investment, okay? Because the definition is going to be different depending on what, on your values, your business, everything like that. So an expense is just something, it's the cost of doing business, okay? Whereas to me, an investment is something that helps you build your business or run your business, that makes your business better. So a lot of times, the reason I want to kind of define the difference, you guys, is because at the end of the year, so many business owners come to me and they're like, okay, I need to spend money. What do I spend it on? And I'm like, something you consider an investment. All right. So if there was this piece of equipment that you've been dying to purchase, right? But you're just like, you've been putting it off because you just didn't know your cash flow. Now you know your cash flow, you know it for the year, and you're like, okay, I still have X amount of dollars that of free money to spend. Okay. This piece of equipment that will make my job easier, right? It'll make my business run faster, or it will help me get more clients, or it'll help me service more clients. Okay, that is an investment. All right. Sometimes continuing education can be an investment, right? Something that makes you do your job better or learn how to serve your clients better. Okay, that can be an investment. New software, maybe things that help automate your processes, right? So maybe, maybe a new email automation service, or maybe a new website, maybe paying someone to design a new website for you. That can be an investment, because what I want you to think about when you're looking to spend this money is, what is your return on investment? And not necessarily numbers, but if I spend this money, what am I expecting to get out of it? All right, so that new piece of equipment, what do you get out of it? You get more efficiency, right? You get to do your job faster and therefore serve clients faster or serve more clients. Okay, that new website, right? What is your return on investing in a new website? Well, you have a better online presence. Your search engine optimization is going to improve. It's going to look more beautiful and more appealing to people, maybe more professional. So they're like, yeah, this person, she's got her shit together. She's legit, right? So that's your return on an investment. So I'm not talking you have to pull out numbers, but you have to make sure that you're getting something back to where it's an investment, not an expense. All right. Maybe you have money and you want to give bonuses, right? You're like, well, what's my return on investment? Well, your return on investment is happy, appreciative employees, right? If you just give them this big, or even not a big, even just even a small bonus that they weren't expecting, holy crap, that's your return on investment, loyal, appreciative employees. All right, so always look at your return on investment when you're looking to spend money. Okay, let's see, Wendy. A client's childhood house, so a client's parents' house. The client is paying the parents' property taxes. Parents are retired. Client wants to claim the property taxes on their return. Is this house now a second home? It can be. Keep in mind that property taxes on Schedule A are limited to that $10,000 limit of both, and that's that $10,000 tax limitation. All right, let's simplify this. Okay, when you itemize, first of all, you have to be itemizing for that to become beneficial, right? So if you're not itemizing on Schedule A, paying extra property taxes, paying someone else's, increasing your property taxes, or any sort of itemized deduction isn't going to be beneficial unless it's going to kick you over that standard deduction and save you more money, right? So the standard deduction is $12,000, I think $200 this year, $400. I get 19 and 20 mixed up. I'm still doing 19 returns, guys. And if you're married, then it's $24,000 and some change. Okay, so unless paying those property taxes are going to kick you up over that standard deduction amount, then there's no benefit to doing that, right? On top of that, with taxes in all of your Schedule A, so you guys, Schedule A deductions are taxes, mortgage interest, charitable contributions. Those are usually our three big ones. There's a few other ones, but those are the big ones, right? Well, only $10,000 max can be from taxes, and that's property taxes and state income taxes. Okay, so if you're in California or New York, then your income taxes are going to be likely way over $10,000. If you're in Texas, your property taxes are going to be way over $10,000, I'm sure. Wendy, I assume you're in Colorado, so I'm just going to assume these clients are in Colorado, so their property taxes are actually probably legit. But if they're paying property taxes on their house and now their parents' house and they have a mortgage, then yes, it may be beneficial if they're not already taking the $10,000 max on their own property taxes and their own state income taxes. Okay, so the question goes, is this, but yes, if the answer is yes, if they can benefit from paying their parents' property taxes and increasing their Schedule A itemized deductions, then yes, it could be a second home. And property taxes on your first and second residence are deductible on Schedule A. So great question. All right, let me hide that. Okay, I will give you guys just a few more seconds if you have any other questions to put them in. Otherwise, there we go. No apologies if it's covered. I'm good to re-explain if it is. Okay, so S Corp W-2 employees. How do we plan for profit margin How do we plan for profit margin for distribution limits when PPP has not yet been forgiven, but expecting it to? It doesn't show up as profit on my P&L, which I think is correct, right? Okay, dang it. Let me look. I wish I knew who you were because you just show up as Facebook user. Let me see if I can look in my, because I like knowing who I'm talking to because I'm sure I know you. Okay, so she's talking about PPP, you guys. And so there we go. It's Andrea. Hi, Andrea. Okay. So the rule on PPP. So PPP, so let's say I get a $50,000 PPP loan. All right. And let's say I plan on getting it all forgiven. All right. I have done all my due diligence. I am confident that I will get it all forgiven. Okay. Normally, when you get free government assistance, whether it's through a grant or something like that, usually free money is considered other income to your business. Okay. Usually. So if I got a $50,000 grant from the state of Colorado, it's going to be considered taxable income to me. Okay. The PPP funds, specifically, the SBA stated that this should not be income, right? They said, we do not want the forgiven PPP money to be income to the business, right? So essentially they were letting us double dip, right? We get this free money and we don't have to pay tax on it. Yes, please. Which made sense since it is a hardship, essentially a grant, right? Since it's hardship fund, kind of made sense for them to allow us to double dip. Then the IRS came back and said, okay, that's fine. The SBA specifically said that it cannot be taxable income, that you're going to get this money. However, we're going to step in and make things complicated as crap and annoying and say, that's fine. We're not going to consider it income because the SBA said we can't. But then we're not going to allow you to deduct those expenses that you spent your money on. Okay. So when all is said and done, same effect, guys. You are going to be taxed on the money you receive for the forgivable portion of PPP. Okay. In a very ridiculously convoluted way. Thank you, IRS. Okay. But in the end, okay, the net result is that my $50,000 PPP loan, forgiven portion of my PPP loan, that's important because if it's not forgiven, it's a loan, you guys, it's not income. But if I get $50,000 forgiven, okay, technically I don't have to put it into my income, right? I don't add it to my other income, but I have to add back in the money I spent it on, right? Because when I spent it, right, so let's say I spent it all on salary, okay? I spent it all on payroll. Okay, so I spent the full $50,000 on payroll. So throughout 2020, it was hitting my P&L, right? Because that's what our payroll does. Okay, so I spent $50,000 in payroll. So my total payroll account for the year, let's say it's $200,000, and $50,000 of that is I used PPP funds. Okay, I have to somehow add that $50,000 of deduction back in because it is no longer deductible. Thank you, IRS. Okay. So her question says, many pieces. So I just kind of want to back up. It doesn't show my P&L, which I think is correct, right? So it's not gonna show up until it's forgiven, right? However, what the IRS is advising at this point is that if you anticipate full forgiveness, do not deduct it on your tax return. This is why I have a feeling we're going to get a lot of extended 2020 tax returns because they're going to apply for forgiveness and then they're not going to get their loan forgiven by the April 15th deadline. And so they're going to hold off because they don't want to have to amend it, right? So Andrew's saying, how do we plan for profit margin from distributions when the PPP has not yet been forgiven, but it's expected to? So let me think about this. So because it hasn't been forgiven right now, okay, because it has not yet been forgiven, it's still sitting on your balance sheet as a loan, right? We're going to go back to my $50,000. There's really loud jet going over. So there's a $50,000 loan sitting on my balance sheet, and we've taken $50,000 in deductions in payroll. So right now, our P&L is sitting at $50,000 lower than it's going to be once we have to add back that deduction, right? I think, how do we plan for profit margin distribution? So for me, and I tend to be on kind of a conservative side, right? I would plan on those distributions off what I'm at without. So right now, your P&L is correct, right? And then eventually we're gonna have to add back in the 50,000. We're gonna say, so it's gonna increase our P&L. I would make distributions off that lower number, okay? With the exception of you could distribute out some additional money to pay for the taxes that you're gonna, because eventually, right, if you're an S corp, you end up paying those taxes on your personal return, right? The business doesn't actually pay income tax, so let's up this to 100,000 because even numbers are better. So if I have $100,000, right, that right now is decreasing my P&L because I've spent the money, but I haven't forgiven the loan yet. So my P&L is $100,000 less than it is going to be when that loan is forgiven. Okay, I would make my distributions off that number. So let's say it's 50 grand after that, right? So I'm saying, okay, 50 grand, I would normally distribute out half of that. I'm just throwing out numbers. Okay, don't make more. Okay, make 50% off that lower number. With the exception, what I would kind of do is an add back and say, okay, but that's my normal distribution, but you deserve to distribute out what you're going to have to pay in taxes on that $100,000 that you're going to have to add back into taxable income, right? And so if you're in the 24% tax bracket, I would say you could make another $24,000. And this also, you guys, comes down to cash, because if you spent all the cash, then you're not going to have it, and it's going to be a little tighter. So definitely, what a good question, Andrea. Definitely something that you want to sit down with your bookkeeper, your accountant, your CPA, and specifically ask this question. And the way you asked it was perfect, because I'm trying to answer it in a general way. But, my questions that come up is, well, what if I'm already below what I want to distribute out? What if once I'm over it, I don't have the cash to make that extra distribute? There's so many questions going on in my head that when you sit down and look at the P&L and the balance sheet with your accountant, we'll be able to answer that for you. Okay. So, all right, you guys, I have gone over my time. My 10 o'clock is probably waiting for me. Luckily, she's a friend. So Wendy says maybe a dry eraser board would be helpful. Yes. I could do is I could share my screen and have like a notebook out. So that's a great idea, Wendy. Wendy says maybe a dry eraser board would be useful. Yes. So, but if it was a dry eraser, my back would be to you. But if I shared my screen, then I could just kind of do the calculations on there. So anyway, all right, y'all, I'm going to get to my 10 o'clock meeting. I will see you guys next week. 9 o'clock is our training time. Oh my gosh, what are we learning about next week? I haven't put it up here. Why don't we take a peek? 9:30 Mountain Standard Time, which is where you're at now, is our normal Q&A and update. Maybe we'll have an update of some sort. Maybe something will be going through Congress. Maybe, hopefully. And then next week at 9 o'clock, next week is the 30th. What is reasonable compensation and how do I calculate it? So come on back for that. Maybe, Wendy, I'll have a dry erase board for you or something. I'll come up with something. All right, you guys have a great week. I will see you guys next week.